Establishment Act. Somebody may ask, is it that FRS was not existing before 2007? The answer is that it was under another name. The name FRS came into existence in 2007. So it was actually existing as the Federal Board of Inland Revenue or something like that. Board of Inland Revenue. But the name was changed to FRS through this Establishment Act, and it was from this 2007 the agency was given extended powers, making it semi-autonomous. So then you have some other, tax laws. The Company Income Tax Act. You have the Personal Income Tax Act. You have the Petroleum Profit Tax. This Petroleum Profit Tax, of course, has now been changed. But why I left it like this, last year, August to be precise, the President signed the almighty law into law. That is the PIB. So that PIB, or now PIA, Petroleum Industries Act, is to replace the PPT. But why I left it at PPT there was that federal government came because of this issue of subsidy, some few weeks back and said they were suspending the implementation of that PIA for 18 months or something like that. So then you have the VAT Act, and you have the various finance acts. As of today, we have 3 finance acts. The finance acts, the first one we got was in recent time was the 2019 Finance Act. We also had that of 2020. The latest one is the 2021 Finance Act. I can also tell you there will be 2022 Finance Act. We are using this Finance Act to bring Nigeria up to speed with international best practices in taxation. Because the world is a dynamic place. You have a whole lot of changes happening in the operating environment. So if you enact a particular tax law today, after 2 years, that law or some portions of the law become obsolete. So we saw what they were doing in some other countries like UK, that every year as they're sending the appropriation bill to the National Assembly or to the Parliament, they will accompany it with a Finance Act. That Finance Act will make amendments or will bring amendments to provisions of existing tax laws to bring them up to speed. And part of it is, these digital companies, a whole lot of transactions now moving away from physical stores to online trading. So we need to catch up with what is happening. We need to find a way of bringing the digital players or the operators in the digital space into the tax net. Because if you don't do that, they will always find a way of escaping from paying tax. So one of the reasons why we introduced the Finance Act was to make Nigeria to be up to date, to have current laws that deal with current realities. All right. Now, FRS in particular, as I said earlier, was created in 2007. And you will see that if you look at our law, you will see that FRS is the agency of government that is given the sole mandate of assessing, collecting, and accounting for federal government taxes. And it is important we recognize that we do not only collect, we are given the mandate to assess, collect, and account for taxes for the federal government. Those taxes and levies that are due to the federal government, we are the only agency that is given that mandate. All right? And I want to emphasize this, a little bit, because there have been these conflicts of, you see some government agencies trying to claim that they have powers to perform some of these roles. We have actually been having a bit of this running battle with some of them that behave as if they have the powers to administer taxes on behalf of the federal government. But if you look at our Establishment Act, you find out that the Establishment Act is so clear on who has that responsibility. So we assess in terms of determining the amount of tax to be paid. Later on, I will take you through the processes involved in determining the right amount of tax. So we have to assess individuals. Earlier we were talking about individuals and corporate entities. We have to assess, collect the amount that is due, and of course provide the accounts or the reports that show what has been collected. There is no other agency you can go to today and say, what did federal government generate in 2019, in 2020, 10 years ago? You can only come to us. But in our office, we welcome a lot of people. We receive inquiries from a whole lot of people, maybe those doing doctoral research that want to know what federal government collected 10, 15, 20 years ago. All right, so that is who we are. Federal Revenue Service. Take a look at our vision and mission. Our mission is to operate a transparent and efficient tax system that optimizes tax revenue collection and voluntary compliance. You see, this tells you where we want to be, the vision and the mission, and how we want to get there. If you look at the mission in particular, it is talking about optimizing tax revenue collection. And that is what the current administration in FIRS is trying to pursue. And we also recognize that you cannot optimize tax revenue collection without making people or taxpayers to comply voluntarily. Later, when I'll be taking you through the initiatives of the current FIRS administration, you will see that most of those initiatives are actually targeted at promoting voluntary compliance. We want to arrive at a state where people pay tax voluntarily, without so much enforcement, without so much push from our end. And that is what is working in the Western world. People comply voluntarily. And in fact, if you read publications by IMF, they try to emphasize on this so much. So we believe that maybe in the next few years, Nigeria will get to that position where a large chunk of Nigerians will begin to comply voluntarily. And that is part of the reason we are having this discussion. Because we have recognized you as a stakeholder and we want you to help us to achieve that position. The truth is that paying tax is not sweet for anybody, even in the United States. But in as much as it's not sweet, if you recognize the benefits that come from tax, just like we highlighted earlier, you will see that the best thing for everyone to do is to comply voluntarily. Take a look at our vision. We said our vision is to deliver quality service to taxpayers in partnership with other stakeholders and make taxation the pivot of national development. You can see why we are having this discussion today, that we want to render quality service to taxpayers in partnership with stakeholders. And that's, we recognize the media practitioners as our big stakeholder. and we want to partner with you in trying to achieve our mandate. All right. The Federal Revenue Service, as you may be aware, has been doing a whole lot in the past few years. And last year we achieved 6.4 trillion naira in terms of revenue collection, and that amount has never been collected before. And that is to tell you the level of effort FRS is putting in trying to achieve this mandate. 6.4 trillion. If you check the amount that came from other sources, you will see that they were nowhere near this, even from the oil sources. If you look at last year, you will see that FRS was the biggest contributor to the amount at FAC, Federal Accounts and Allocation Committee. Of course, you know that every month, our system here demands that every month we come together in Abuja, do a FAC meeting, and whatever is collected in line with what the Constitution says is shared among the three tiers of government. What we contributed to that cause was unprecedented. And we want to do more. And to show you that we want to do more, we have gladly accepted the target for 2020. And as you can see, 10.4 trillion. And we accepted it with smiles. Again, that is part of the reason why we are reaching out to all stakeholders. Increasing our target by over 63% is no small feat. It will be very challenging, we acknowledge. But we know we can achieve it. And not just us, if we go into collaboration with you and other stakeholders, we should be able to not just achieve it, but to surpass that amount. We can't wait to smile come December this year, when we believe we will be able to achieve that 10.4 trillion. Some of our functions, as contained in our Establishment Act, include: we are mandated to collect, recover, and pay to designated accounts any tax under any provision of this Act, that is the FRS Establishment Act, or any other enactment or law. So we collect. We also have responsibility to recover, meaning amounts that are being owed. Those we refer to as arrears. We recover from organizations or individuals that fail to pay in due time. And of course, pay the money into designated account. I must point out at this moment that you need to help us to preach this message, that we don't collect taxes and bring them to our office or pay them into our account. FRS does not own any account in any commercial bank where tax revenues are paid into. This is important, and this is for those that are misunderstood out there. I was delivering a lecture at one of the top government agencies recently. I think that was last month. And this issue came up. And it took me a whole lot of time to explain to them the process of tax collection, that every little kobo collected goes straight to CBN designated account. None comes to us, not even one kobo. Rather, what we get is a portion of it after FAC meeting. In other words, it is Accountant General of the Federation that releases money, a portion, in line with the directive of National Assembly, that releases a portion to us from what we have collected as part of what we call cost of collection. So when people make a lot of comments and say, you people collect now and give federal government what you like to give to federal government, it is total falsehood. When a demand notice is sent to a taxpayer, be it an individual or a corporate entity, and the demand notice reads, let's say, 200,000, that taxpayer has to go to the bank to pay. And when you are walking to the bank to pay, as the bank is processing it, it's going straight to CBN designated account. Of course, some of the money we collect go to the federation account, while some of the money, the ones that belong specifically to federal government, go to consolidated revenue account, in line with what you have in the constitution. Those ones that are meant for sharing are the ones that go to federation account. Part of our function is to assess persons, including companies, enterprises, and individuals chargeable with us. I think I have said it. We do assess, we do determine what is right to be paid. Even though we run what we call, or we adopted what is known as self-assessment regime. I think I will talk about that shortly, where individuals have to do that themselves. We still have the final say to say, oh, if you say your tax liability is 50,000, it's only when we agree with you that it's 50,000 that is the final tax. But sometimes we assess you and say, oh, it's not 50, it's 70,000 you're supposed to pay. Then we'll have to ask you to pay the extra 20,000 on top, because we have the mandate to assess. Part of our function is not just to assess, collect, and enforce payment of taxes as may be due to the government. Enforcement. In fact, we have an enforcement department. That enforcement department is activated when there is need to enforce, tax collection. Of course, like I said, in all parts of the world, it's actually a challenge. People don't want to pay taxes. So, but it is only those that lack knowledge. For those that want to demonstrate that maybe they are bigger than government, at that point, we will activate this part of our responsibility to enforce. And of course, when we enforce, we push the taxpayer to do the right thing, to comply with the tax laws, which is what we pray. If it is possible to pray and let it happen, we don't want to enforce tax payment. If we come to that point where we have achieved high percentage of voluntary compliance, we will be very happy and we won't be enforcing anything. Part of our function is to collaborate with relevant ministries, departments, and agencies, review the tax regimes, and promote the application of tax. Because we do a whole lot of collaboration with other agencies, the EFCC, the ICPC. We have already talked about the first one, raising revenue for the government. Forget about this situation we find ourselves in Nigeria, where we can say, oh, Nigeria is blessed with natural resources like crude oil, gas, and maybe royalties paid from those that are into oil and gas exploration might be a source of revenue for the government. But likely in most countries, you find out that most government expenditures, most government budgets are financed or funded through tax. That's how the economies that we look up to, especially those in the Western world, that's how they are funded. I was listening to one video online, one of the social media platforms yesterday, and they were interviewing a Nigerian citizen who has been in Germany for quite some time. And one of the things he said was that in Germany, anything you earn you have to pay 41% of it to the government. So the income tax there is 41%. That's what he said. I don't know how true is that because I actually saw that on the social media. But one thing you can be sure of is that in the Western world, the tax rate is usually very, very high. Much, much higher than what you find in this part of the world. So government's revenue has to be largely derived from taxes. In those economies that are working well, that is what we find. But there have been a lot of studies. People have done research trying to determine the correlation between taxes and the level of economic development. So, but the second point there is quite an interesting one, and a whole lot of people seem not to know that one of the major reasons why there has to be tax is redistribution of wealth. One of the main roles of taxation is to redistribute wealth from those that have to those that don't have. That is why a progressive tax system is actually aimed at collecting money from the rich and use it to make amenities or public goods available for everyone, including the poor. So we can make the Dangotes, the Tedelas of this world to pay more and use that money. Of course, that money comes into the purse of the government, and of course, government uses it to build, let's say, a primary school in one particular location. And everybody in that location will be able to attend the primary school or secondary school. Or use it to build borehole and make potable water available in that community. And that is money collected from the Dangotes of this world and the Tedelas of this world, the rich guys. So if you do that, if the government does that and find a way of doing that well, that's what we are referring here as using tax as a tool for redistributing wealth. Whether we are doing it well here that one is a different. But that's what the Western economies have. They have found a beautiful way of dealing with tax as a way of redistributing wealth. The other one there is using tax as a tool for protecting local industries. Of course, if you want to protect, most of the developing economies, especially the focus is on African economies now. A whole lot of people will say, why are you relying so much on China? You find out that most of the things imported are actually imported from China. And part of the problem is that when you have local industries that are producing the same thing that have been imported from China, you find out that the goods imported from China are cheaper than those that make it available locally. So what government can do using tax is to tax heavily or raise the taxes on those goods imported from China. And once you raise the taxes on them, the prices will go up, and that will enable the local manufacturers to survive. So some economies have done it and done it very well. During the time of Donald Trump in the United States, he tried to put pressure on China to raise the value of their currency. He accused China that they were deliberately devaluing their currency. Of course, one of the benefits of devaluing a country's currency is it will make your exports cheaper. So he was actually saying that the currency of China is much valued than what China allowed it to be. In other words, China was deliberately keeping the value of their currency low. Another one is to use taxes to manage inflation. In secondary school, we are told that there are two kinds of inflation: cost push inflation and demand pull inflation. In other words, inflation caused by excess demand, or the other inflation caused by high rises, in cost of products. Whichever one it is, we can use taxes to deal with this. For instance, for demand pull inflation, where people have so much money in their pocket and their demand is much more than the supply of goods available in the market, government can use taxes to reduce the amount available for people to spend. If I earn 100,000 in a month, and the taxes I have to pay is 20,000, that means I have 80,000 available to spend. If government increases that to 30,000, what I will have available to spend is 70,000. And my level of demand from ShopRite, my level of demand from Wuse Market will go down. So that's one of the ways of dealing, one of the things we can use taxes to do. We can also use taxes to discourage consumption of some certain products. A good example is, generally it is believed, even when you go to hospitals, they will say, reduce the level of alcohol you take. Do exercise, reduce the level. So let's take it that too much alcohol is no good. So if a country wants to reduce the level of alcohol intake of its citizens, one of the things it can do is to deploy tax. So we can raise taxes on alcohol, we can raise taxes on cigarettes in order to discourage their consumption by our citizens. I mean, it is easy to deal with some of these things. If you don't want your citizens to smoke cigarettes, let one stick of cigarettes be 2,000 naira. Of course, the truth is that, because of the issue of habit, something that is habitual or something you are addicted to, people will stick. But I can tell you that a good number of people will stop because of that. One stick, 2,000. Yeah. When you think of how many module of diarrhea or rice that 2,000 will give you, you will just stop. I swear. That's 10,000. Okay. I have a friend that whenever he wants to smoke, he finishes one packet at a go. At a go. He doesn't collect one stick of cigarette and smoke.
Because it's cheap.
Should be from Katina.
Assuming that one packet that he usually deals with, assuming it is 10, 15,000, the guy will think twice. Maybe he will now begin to take one stick or two stick, rather than the one packet he finishes at a go. Alright, so that's a good example of that. So looking at these many reasons or many benefits that can be derived from taxation, one can see why every country has it as a tool that is used to manage the economy. We have said earlier that tax is a mandatory financial charge, and to make it that mandatory, you have to bring the force of the law to it. And that's why for countries that do have a constitution, they would definitely insert the need for its citizens to pay taxes in the constitution, just like we have in the Nigerian constitution. But the Nigerian constitution went further to even talk about the need for citizens to declare their income on which taxes will be paid. And the constitution went further to talk about exclusive lists, concurrent lists, and other residual lists, where you have some of these taxes mentioned. Of course, I'm sure all of us are aware of the court case. I think that court case is still on. A court case that arose from Rivers State on the issue of VAT. Who is to collect VAT? Is it the federal government or does it have to be the state? And of course, the Rivers State government, their position is that if you look at the constitution and look at the exclusive list, there is no mention of VAT anywhere in the federal government. That is their position. And of course, the High Court has given favorable judgment. Waiting to see what the judgment will be at the end of the day. But legal basis on the constitutional change that happened.